How to legally never pay tax again. Hello, and welcome to our channel Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing in crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and are looking for smart money management options, then we are fortunate to have found each other. How is it that you always seem to hear stories of the rich and wealthy not paying taxes? Each year, taxes make up the single largest expense from your gross income. Well, it's not that the rich are doing anything illegal. Well, most of them anyway. They know how taxes work. Knowing this system, following the rules, and implementing tax reduction strategies is how they do it. The good news is anyone can implement these strategies as long as they know what they are. This is why today we will look at some legitimate and legal methods by which you'll never have to pay taxes again. Sounds too good to be true, right? Well, we're going to tell you how this works. In 2018, Amazon earned over $200 billion in revenue, yet didn't pay a single penny in income tax. How is this possible? The wealthiest people in the world aren't always the most intelligent people, but they know who to employ to help them achieve what they want. Being super smart with how they handle their money is something that helps their money grow exponentially. And with so much money, they have a lot of taxes to pay. But these people have an excellent idea of how to work the tax system, which we will be discussing today. Now, let's begin discussing how you can avoid paying large amounts of tax. Write off your expenses. The wealthiest people in the world earn their fortunes through their businesses. This allows them to write off their expenses to lower the taxes they potentially have to pay. Using this secret, most of your costs in your day-to-day business can be written off against your gross income to reduce the payable taxes. As an example, let us consider that you run a small tech startup and its revenue is $300,000 a year. If you had no expenses, then that entire amount will be subjected to tax. Whereas, if your company incurs costs, the taxation on your total earnings will be reduced as business-related expenses will deduct some amount from your total earnings. If you have these expenses for $100,000, then the taxable amount will be $200,000. This way, you can avoid 33.33% of taxation on your earnings. Legitimate business-related expenses include office meals, supplies, logistics, travel, maintenance, and contractor services. This technique is helpful if you own a large business but work for any size business and some personal income situations. This is the primary method that makes us see people who own these companies typically pay fewer taxes than people who earn income through their jobs. Individual Retirement Account. An individual retirement account, or IRA, allows income to be put into an investment account. It then taxes to be paid off later on, essentially deferring tax for decades. This legal secret of the rich prevents them from paying taxes because every dollar put into the IRA becomes tax deductible, and the tax is returned each year when filing taxes. Using this secret, you should use this kind of account to hold your money and grow over time and defer tax. Income earned using employment is always subject to taxation, so deposit a large chunk of it into your IRA if you want to avoid paying tax as soon as your income arrives. Consider a scenario where you earn $50,000 a year and pay 15% tax. While having an IRA, you can pay half of that, which is 7.5%. With an IRA, you do not pay tax on money that goes into your IRA and instead pay it when you withdraw those funds from your IRA decades from now. And during retirement, the money you withdraw will be taxed at a lower rate because you won't be earning $50,000. Buying an annuity. An annuity is a savings account within an insurance company. It is going to save you tax, but the problem is that you have to pay an extra fee to get that shelter. You do save money on taxes, but as we said, there's a fee that comes with it. The only time buying an annuity will benefit you is when you've maxed out all other retirement savings and your house has been paid for. Although most people haven't gotten there, many are working towards it. You need to remember that you are not getting an annuity to save on tax. Other features offered are protected from creditors, several investment options, and benefits to heirs. If you look to take advantage of these other ways along with the avoidance of tax, then that will give you a bigger edge on opening an annuity. A quick reminder, if you've enjoyed the video so far, consider subscribing, as we frequently upload such informative and educational videos. Let's continue. Charity donations. This might not sound true, but many people work their way around never paying taxes because of all of the charitable donations. Charity is a way to give back to the community since you have more money than you can handle. But this also brings other positives to the table. When you put your money into a charity, you manage to reduce the taxes on your name, and second, you contribute to society's goodwill. Countless billionaires in the world give their money to charity as philanthropists. These people started with nothing, and since now they're one of the wealthiest men in the world, they don't give their money away for a good cause only. Some examples include Jeff Bezos, Bill Gates, and Warren Buffett. Netting revenues against losses. According to statistics gathered, 20% of small businesses tend to fail in their first year. 30% of small businesses fail in their second year, and 50% fail after spending 5 years in business. Finally, 70% of small business owners fail in their 10th year. Ultimately, upwards of 90% of all small businesses fail. Even though these stats might tell us a different story, there are still chances of succeeding when you have a business on your hands. One of the ways you can make that happen is by loss carry forward. Most companies require a few years in business before they start generating profit. And in the years when business is still gaining traction, losses are bound to be incurred. These losses then become excellent tax avoidance tools for future times come. The rich know this and keep this in mind to help them think long-term when starting a new business venture. Loss carry-forwards can be netted against your total earnings to reduce your overall taxes that are payable. This means that less of your income will be subjected to tax. Leveraging geographical tax laws. One might think relocating their business is expensive and bad for business, but what if moving could provide a return on investment and ultimately put 10 or 20% profit back in your pocket? How? The rich know that every state in the United States has different tax rates for the wealthiest people in the state. For Silicon Valley residents, the federal tax rate for the highest earners is 13.3%. While federal taxes can't be avoided, the other taxes which can be avoided should undoubtedly be worked on. This problem can seemingly be solved by relocating to places where you pay less or no tax. Such states include Texas, Nevada, and Florida. So the 13.3% tax that you're paying while living in Silicon Valley can be avoided if you relocate to these states or other states where taxation percentages are lower than 13.3%. Investing in real estate. One of the reasons the wealthiest people in the world tend to get even richer is because they use their investments to make their money work for them. One of the ways this is possible is when they invest in real estate. When they buy a property, they're getting a depreciable asset. And because this asset loses its value over time, they can write off the depreciation price from the overall income subjected to tax. Several things can cause an asset to lose value over time, such as repairs, age of the asset, type of asset, and miscellaneous major expenses. However, there is a catch. If the asset is sold for more than it was originally worth, the owner has to pay taxes on that gain. This tax is called depreciation recapture tax. It's important to note that this only applies to investment properties. You cannot give your children a property through a trust account and have them avoid this tax. Issuing stock options. The final secret is quite the genius method used by the rich. This method is convenient for two reasons. 1. Stock options are booked as expenses that will reduce profits and the amount of money subject to tax. And number 2, it does not result in a cash outflow for the business. How genius is that? When stocks are issued, they are booked as an expense for accounting purposes, but no cash changes hands, which helps the company reduce its profit through the expense and maintain a strong cash position. Moreover, the companies that do this help increase the prices of stocks for their shareholders. Issuing stock each year helps the rich minimize tax when the rest of the other methods have been exhausted. Using health savings account. Employees who have a high-deductible health insurance plan can end up using a health savings account that assists them in reducing taxes. As the case with a 401k, health savings account contributions that the employer matches by payroll deduction are excluded from the employee's taxable income. The direct contributions to a health savings account are completely tax-deductible from their income. With these tax avoidance techniques, you can lower and eventually avoid paying high taxes whether you are employed or have a business. Writing off your expenses, setting up a retirement account, issuing stock options, donating to charity for goodwill, and netting revenue against losses are only some of the ways you can use to work around paying taxes. Apart from these, leveraging geographical tax laws, using health savings accounts, investing in real estate, and buying an annuity are other ways by which you can legally avoid paying taxes. Use these methods, and the difference you are going to see while saving all your money will be huge. Please subscribe to the channel, like the video, and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya till the next time.